Gives me great pleasure now to bring on board India's biggest banker, Mr. Dinesh Kumar Khara, to talk about economy, SBI, and how things are moving for the financial market per se. I just want to set the tone for this interview. State Bank of India for the quarter gone by has reported net profits highest ever in the industry. ROA is now over 1%, credit growth is firing full cylinders, NPA is under control. So what is the way forward for India's biggest bank? And that in a sense would be the harbinger of what will it means for the economy as well. Mr. Khara, thank you for your time. Always a pleasure to interact with you. First, my compliments and sincere compliments. I've had the pleasure of tracking the SBI journey, but whatever you committed in terms of achieving credit growth, ROA, NPAs, everything is now been delivered. And you've delivered everything 2 years ahead of what you'd indicated. So what is the secret sauce here?
Thank you very much, Nikunj. My sincere thanks for having me on your channel. Well, of course, when it comes to the banking is actually derived from the economy. When the economy does well, it gives us an opportunity. But at the same time, it is very essential that we also should manage our ship well. So I think last couple of years, we have invested well in terms of strengthening our underwriting practices significantly. And when it comes to provisioning, it is more than the regulatory provision. Whenever we feel that there are challenges in the economy, there are challenges in the account in particular, we prefer to provide for it even before the regulatory requirements expect us to provide for it. So essentially the idea was that we must insulate our balance sheet from any future shock. And that continues to be the practice even going forward. So I think having said that, one, of course, our underwriting has got strengthened quite a lot. Provisioning is something we reckon the risk at the earliest and then we provide for it. And also our effort in terms of digitization, in terms of loan management system, all that has also started yielding results, and that is the net result of that is what you have seen, that we have got a situation where the credit cost has come down, our NPA, net NPAs are less than 1%, and also it is at 0.80% actually, and also when it comes to our ROA for the quarter, we have exceeded 1%. So I think it's a culmination of multiple efforts which were there in the offing for quite some time. But yes, of course, it's very encouraging to hear your compliments. Thank you very much.
Mr. Khara, you have guided for a 12 to 14% growth, but what you've clocked is a 20% growth. Are you being conservative, or this is a realistic number?
No, actually, when we clocked 20% growth, that was the busy season, and normally we have seen that the busy season and the normal activity, there is always a difference. So that is the reason why, on an average for the year as a whole, we expect that as against 20% in the busy season, we should be in a position to record about 14 to 16% kind of a growth.
But 12 to 14%, can I say is the conservative number?
It is because this is my philosophy: under promise and over deliver, and I would like to stick to that. But having said that, efforts are nowhere undermined ever. So whatever is the potential available, which is for the good for the stakeholder and also for the bank, will be more than happy to underwrite.
So fully FY24, we could be in for an upping of guidance.
Let's see.
I'd like to draw your attention to the deposit growth number. The deposits are growing at 10%, credit is growing at 20%, big gap of 10%. And if I look at for State Bank of India's balance sheet, the numbers will be even larger because of your balance sheet size. How are you planning to address it?
There are 2-3 things. We look at deposit as a franchise value, and at the point of time when there were not adequate opportunities available for deployment, we continued to carry on the deposit gathering mission of the bank, because that was perhaps the only secure option available for the depositors. So having done that, we had gathered a lot of deposit during the COVID period, and we deployed that money for investment into government securities or other such instruments which are available. We actually did the rupee dollar swap also and supported our international operations. So the chief funds were available for supporting our international operation. So today when the opportunities have emerged here in the country, we're in a position to unwind those rupee dollar swaps also, and that kind of money is also available for supporting our domestic balance sheet. Apart from that, we have got excess SLR, which is also almost to the tune of about 3.25 trillion to 3.50 trillion. So we will be unwinding that excess SLR also as and when there is a need for supporting the balance sheet. As of now, because our deposit base is significantly higher, it is about 40 trillion Indian rupees, and the domestic loan book is about 25 trillion. So even if that grows at about 10 trillion and here it grows by about 18-20%, so we still have enough, we can match the deposit vis-a-vis what we are lending. So I think overall I would say that as of now we have no challenge in terms of our capital, no challenge in terms of our inability to support the growth in credit. We are quite comfortably placed, and we have been increasing the interest rates and deposits also depending upon our asset liability requirements, and also as I mentioned that we recognize deposit as a franchise value and we would like to be fair with our depositors as well.
But State Bank of India has different levers. But do you see this being a challenge for the industry per se, where the deposit growth is lacking the credit growth?
Yeah, for the industry, yes, of course, there is, because that is actually seen when people quote their interest rates or the bulk deposits. So at times that's a reflection of desperation. But yes, of course, when it comes to banking, one has to strike a balance between the borrower's interest as well as the depositor's interest. Eventually, one has to keep in mind that how much the borrowers can also take the increase in interest rate. So that also cannot be ignored. So I think, but yes, of course, when it comes to industry as a whole, I would certainly say yes, there seems to be some anxiety on the part of some of the banks.
When we spoke to you last time, you said that look, in the first credit rate hike cycle, banks will enjoy higher NIMs because deposits will always lack the credit growth rates. Is that adjustment over now? Because sooner than later interest rates will peak out.
No, it will actually happen. What happened that we have for State Bank of India, our 74% of the book is linked to either MCLR or EBLR. As far as the EBLR is concerned, transmission happens instantaneously. So we, out of that 74%, almost 50% of that is actually linked to MCLR. And even in MCLR also, it is spread, it is linked to 6 months and 1 year. So almost 50% of MCLR book is linked to 6 months and 50% of that is linked to about 1 year MCLR. So I would say that because ever since the interest rate increases started happening, and MCLR is actually is a derivative of a formula. So wherein the market rates also factor actually comprise of a very significant component. So I think, in fact, in our case, I would say that we still expect a significant part of MCLR book to be repriced. Whereas when it comes to deposits against about 190 basis point increase in the policy rate, my expectation is that we would have done a transmission of about 190 to 100 basis point. So that is the transmission which we have already done. But loan book, I expect some NIM expansion is still awaiting because, as I mentioned, MCLR book repricing has yet to happen.
When you look at the credit growth, Mr. Khara, is it a combination of working capital or capex, or is it both?
It's a combination of both, and apart from that, there is another factor also which has contributed to the credit growth, and that is when the international market, the interest rates are moving up and moving up quite rapidly. So that also has created a situation where the borrowers who are depending upon the international market for raising money, they have started looking at India also as one of the potential option, because credit is available cheap in India as compared to, if at all we look at the international markets, and also if at all we will load the cost of hedging, then perhaps it is available cheaper in India. So that is also is one of the reasons why the corporates have also started looking at Indian markets for raising their loans.
And do you see a comfort when you look at corporate balance sheets, the project reports you come across? Do you see that there is a renewed optimism and a new capex and a corporate cycle has started?
Yeah, I'll just give you one ballpark figure. In the year 22, financial year 22, there were about 20 trillion fresh investment was announced by the corporate sector in general, and out of that, a significant portion, almost about 70% of that, came from the private sector. Whereas in the previous years, it used to be about 10 trillion, and even in the current year, this number, comparable number, is about 12 trillion in the first half. So that very clearly reflects that the private sector has got a lot of confidence in the India story, and that's why they are coming out with the fresh proposals, fresh investment commitments. So, and when we look at our own our own pipeline in State Bank of India, we would have a strong pipeline of about 2.5 trillion even now, and it is actually almost equally spread in the term loan as well as in working capital. And also we have also seen an improvement in the working capital utilization. It has gone up to about 54% now from about 51%. So about 3% increase in the working capital utilization. Again, that is attributed to the capacity utilization in the economy, which has inched towards 75%. And invariably we have seen that as and when the capacity utilization moves towards 75%, people start thinking in terms of fresh investments.
When I look at your numbers, Mr. Khara, I mean, one of the success stories really has been ROA. I for one thought that ROA will not be close to 1%, looking at the environment and the legacy challenges of State Bank of India. But you managed to deliver ROA of 1% plus 2 years ahead of what you actually indicated. So markets want to know that you achieved this 2 years ago. What is the next thing you would like to achieve on the ROA front?
I would like to see it sustains at this level and even improve it. Whatever level we achieve, we would look to see that it sustains at that level. So it should be a sustainable number. That is what our effort is.
Can I say 1% is the new normal for ROA for State Bank of India?
I think once it stabilizes at this number, then we can probably make a tall claim like that. But yes, of course, our effort and endeavor is that it should become a new normal.
A question for the benefit of our viewers. There are two ways to look at earnings of any banks. One, structural upturn. Second is cyclical upturn. How much of your business currently is at a cyclical upturn and how much of your business is at a structural upturn?
See, if we look at the way our balance sheet is stacked up in terms of the loan book, almost about 45% of the loan book is a retail book. Retail means pure play retail. It is actually not the RAM, it is retail. So from that point of view, we have seen a compounded annual growth rate of about 16% in this book during the past couple of years, for last 4-5 years. To my mind, there is still ample opportunity for us to continue to grow in this particular segment. So I think this is absolutely something which is a trend which you have seen in the past, and the way we look at the macro, the way we look at the demography, it seems that there is no challenge to this book, and it is in terms of the quality, it is perhaps the best quality book also. Similarly, SME we have started growing. We started growing for last about almost 1.5 years time. So I think going forward, even that also will offer a decent opportunity for us to grow. Corporate book large corporate book is essentially a function of the economy, and we have generally seen that when the economy is on the upswing, this book actually grows at a faster pace. But nevertheless, I think now, as I look at the scenario for the time being, to my mind, there is a very positive signs. These are very positive signs for the economy, and perhaps in this particular phase, the corporate book would witness sustained growth. So that's how I really split my book and see the growth trends.
If I look at State Bank of India in last couple of years, you've gained market share because of rates, because of size, and because of your reach. And a classic example here is home loan market. You've changed the rules of the game. You bought interest rates lower and you're still making money. Which is the next pocket you're likely to disturb?
No, of course, our Express credit is again something which is doing very well. Home loan will be the mainstay because the way I read the situation, there is still unsatisfied market for the home loans, and more so the kind of reality which we face in terms of the nuclear families today. Uh, the Probably the age of acquiring home has come down as compared to what it used to be about 40 years, 45 years, couple of years back. As compared to that, the younger generation acquire home at the age of 35. So I think this is that way this is a very important trend which we will continue to see. And when we look around the various important markets, and when we look around for our sourcing, we observe that there is a very healthy trend which you observe. And when I look at my data relating to sanctions, etc., it's a very healthy trend. So I think home loan will continue to grow at this pace, even for that matter unsecured credit also, because this we are offering to those who are maintaining their salary accounts, and those are well conducted salary accounts. So even that book will also continue to grow. Even for that matter, the pension loans, not much has been talked about this particular aspect also. Almost we have built a book of about 40,000 crore in pension loans, and this is against the future pension receivables. So I think even the way the cost of living is going up, particularly during inflationary conditions, I expect that even this pension loan book will also be growing going forward. So I think apart from many other things, this is when it comes to retail, but SME I expect that we should have decent growth. We have created enough enablers on ground. We also have, our effort is to get into SME book, which in terms of quality is perhaps the best. So that is our effort and endeavor. And even in the agricultural sector, we have started looking at high value agriculture. We have started looking at agri-techs, which actually are enablers for the agri ecosystem of the economy. And I think the way I look at it is these agri-techs are actually going to be a productivity booster for the agricultural sector. And there are many of such entities who are actually trying to connect the farm to the market. So that is something I believe that these opportunities needs to be supported, and we have started tapping such opportunities, and we will be building up the book in this direction also.
Mr. Khara, let me speak from a personal experience. I've got a home loan, and interest rates have gone from 6.8 to about 8.5, 8.6, which means the tenure of the home loan, which I currently have, has got extended. As a result, it will impact my spending power and affordability. Looking at the interest rate hike, don't you think that somewhere affordability or even capability will get challenged?
Actually, I would like to share, when it comes to home loans, the duration of the average home loan is about 20-25 years. But in fact, we have seen that normally it gets repaid within 7 to 10 years. So I do agree with what you are saying, that the interest rates have gone up. So I think if at all, in the normal course it would have run 7 years, perhaps it will run 9 years. That is the only difference. And otherwise also the other very important component is that we have always seen that the salaries also keep on increasing. So when the salaries increase, the EMI which looks a very Herculean task today, maybe 5 years down the line, it does not look to be as significant a number. So this is the other reality, because it's a long-term loan, and normally considering the fact that people get their bonuses, people get their some kind of a one-offs which they get in their income. So they use all that for paying off. So I think I would say that it actually brings in a lot of discipline in the spending habits also, which eventually is for the good.
So the interest rate hike, whether it is home loan or retail loan, unsecured or secured, or whether it's corporate loan, you don't think right now there is a risk of NPS?
Absolutely. This is what I'm quite confident, because normally we have seen that salaries this year have gone up in the corporate sector by almost about 10%. So even if your 7% loan has become little 8%, little more than 8%, still part of it is taken care of by your increase in salaries too. And in any case, what we normally do is our loan to value in case of home loan leaves sufficient safety margin. So in fact, that is one of the reasons why our book is exceptionally of a good quality.
You've gone on record and you've said that you will take SBI Mutual Fund public when there is the right valuation. What is your view of the right valuation?
I think perhaps even now also the way the market is, there is a room for it to really reckon the inherent value of the entity, and that is why perhaps for the time being we'll wait and watch for the right opportune time.
Can you define time being for us? And what is the right opportunity?
We will keep on tracking the situation on ground, and as and when we feel that yes, of course, it's a time.
For State Bank of India to grow, ultimately the challenge now would be getting more liabilities. What is the plan in place to do that?
One, of course, when it comes to YONO, the convenience factor is very important. Convenience and also the value in the proposition which we have. So I think we are addressing both the things, and today almost of about 62% of our deposit accounts, savings bank accounts are getting opened through YONO. So which is few clicks, and also we have started offering the video KYC. Effort is that we should be in a position to offer this facility of opening accounts and convenience through all possible channels. And my very strong belief is that if at all we have got a strong value proposition, we will not only open the accounts, we will also see that it becomes a primary account for the customer. So we are actually tapping all potential sources in terms of all those home loan borrowers who are not maintaining their primary deposit accounts. We are trying to get their deposit accounts. Similarly, we have got a large pool of PPF account holders. So we are trying to reach out to them for sourcing their primary deposit accounts. So that will continue to be an effort and endeavor. It is not that it is a seasonal, it will be on an ongoing basis. But the principle is that we have to create more and more value for our constituents so that we are in a position to serve them better and have the larger wallet share of their savings.
When I walked into a State Bank of India branch 2 weeks ago, I saw different energy levels. The image of State Bank of India a couple of years ago was that it's India's biggest bank and perhaps one of the oldest bank. Now the energy levels are such that everyone is saying, yes, we are old, but we are also 216 years old young. A lot has changed in your tenure. What is the secret sauce here? And I'm just going to extend my question by saying that a State Bank of India employee, the salary levels or ESOPs are not comparable to the private banks. But in terms of productivity, efficiency and return ratios, they are comparable now. How have you achieved this? It's incredible.
I would say that trying to align the employees' goals with the corporate goal. And this is something which we are reinforcing in all our meetings. And perhaps it is very well understood, appreciated, and we could win their hearts also, so that they are now committed in terms of achieving excellence. It's an effort for achieving excellence. This is something which we are trying to convey to all, and people have started contributing.
What is the biggest hurdle?
I think I don't see any biggest hurdle. I only see that there is ample opportunity in this country for us to serve our countrymen, and we must do that.
When I spoke to you during the COVID second wave, your words were, I'm cautiously optimistic. But looking at the tone and the tonality of today's interview, can I knock out the word cautious? Can I say Dinesh Khara, India's biggest banker, is optimistic?
No, we are optimistic, but having said that, whatever global challenges are there, perhaps taking away the word cautious would not be a right thing.
Why?
Because
global challenges are there and you've still done a 20% growth, sir.
No, that's okay. And that is why perhaps, see, when you drive a car, you cannot afford to have a situation where you don't have a brake. You have to have the brake. So likewise, when you are managing bank, you have to be very mindful that there are many variables which are not controllable.
A lot of analysts, brokers, fund managers, they've written obituary for PSU banks and State Bank of India in particular. The stock is at an all-time high. There are no sell reports on State Bank of India. It has created wealth for shareholders and also wealth for government of India. How do you feel about this change of image for SBI from a capital market standpoint?
I feel very happy. I feel very happy that we have created value for our stakeholders, and our effort and endeavor is that even going forward we will create value for all our stakeholders, customers, shareholders, employees, and everybody.
Final question. State Bank of India has always played important roles, whether it was Jan Dhan and other government programs. What role do you see State Bank of India now would do? Because ultimately there are social obligations and there are commercial compulsions. You have to balance both, purely looking at the nature and the role which you play in the economy.
See, today, while we speak, there is a lot of focus on the climate finance, and I think it's a need of the hour too. So I think in that direction we have already taken some baby steps, both at our organization level also, and also in terms of promoting the green financing. So we have started offering some kind of a discounts to interest rate discounts to all those who are buying green vehicles. We have started offering a separate financing scheme for the rooftop solar, and similarly we are energizing the pump sets also using the solar power. So I think since we are present in all the walks of life in India, we are trying to be a very integral part and conscious of the need of the society in terms of the green finance, and we are taking all steps required so that it becomes a reality. In the recent past, we have also taken initiative in terms of providing the charging facility for the e-vehicles wherever we have got our own spaces, and we are collaborating with one of the leading power company to make it available at those locations, essentially to promote the green vehicles on the streets. So that is what our effort is.
So if I wrap our today's interaction with a message, and correct me if I'm wrong, India's biggest banker, Dinesh Kumar Khara, feels that things are looking robust, global uncertainty cannot be ruled out, and barring global uncertainties, there are no dark clouds on the horizon.
Absolutely, I fully agree with you.
Really appreciate your time, sir, and my compliments once again for what a bumper quarterly performance you've had.
Thank you very much. Thanks a lot, Nikunj.